last 12 months, if you look at the data, most challenging has been Israel's shekel, because the predictability had just gone haywire in that country. So Israel is something which changes us. Number two is Eurozone as a particular. When Euro broke the parity, which came below 1. So if you look at the view of most of the research houses, there is no end to this fall. Euro can go to 0.8, 0.9. Everybody was saying that. But if you look at that from there, from 0.99, euro went up to 1.12, 1.11 was the kind of one and a half kind of, is the top is what euro drew. So what we forgot is that basically, if you look at the composition of the central banks, around 50% of their reserve currency is in dollar. So having said that, maybe 20% is in euro. Now, when euro broke the parity, because the mark-to-market, the 60% of dollar reserve went up to 60 to 63%. What people missed was they kept on moving from Europe, from dollar to euro. There is a switch which happened. And now euro, if you look at the central bank reserve currency percentage-wise, would be closer to 23 or 24%. And dollar has come down a little bit. Because fundamentally what is happening is that it's 0.9 now. Forget what is the intrinsic value of that currency. The from a pure value perspective, it looks liquidity for the central banks to take that switch. So that happened. So that moved from 0.99 to 1.12 to 1.07. So the kind of numbers what we are adding, we are looking at an 14% depreciation of euro, then again and 12 to 13% appreciation of euro. Then we have looked at a 5% depreciation of euro. So these are the volatility numbers, what we see over a period of, let's say, 3 or say 4 years. There's a classic old saying about GBP, which now prevails for euro also. So when euro goes up, it goes in this, which was actually for GBP. When GBP goes up, it goes up in the stairs. And when it comes down in the elevator. So that's the kind of story what we are seeing in euro. And Sakil, for 4 years, it has been an appreciating currency because of various reasons. It went from, I think, 4.5 to sub 3 also. But this year, it has gone from roughly around 3.1 to 3.72. It just breached the very technical resistance level of around 3.72. So these are the two currencies which are very, very, which are on a developed side, which are meaningful currencies, which we are very particular. But then there are African currencies, you cannot do anything about them. Like, Nigeria, Naira, you cannot do anything about it because it's purely controlled. Coming to rupee, it has lost the volatility. Like very clearly when, dollar weakens, rupee will underperform against all currencies. When dollar actually strengthens, rupee will outperform against all other currencies, all basket of currencies. So it has kind of lost the volatility. The central bank has done extremely, extremely well. But most of the currencies are taking cue out of dollars. Though the volatility has been lower, apart from, the situation what it used to be, in periodic terms, right now, like the dollar selling is going on.